Yeah, seems like. Thank you, man. Okay, I say we start now. I will record the live stream, so for everyone that is not, for everyone that's not possible to watch it right now, I will upload it to YouTube, so you can watch it there. Okay, about market structure. I've seen that a lot of people are still confused about market structure, and it can be complicated due to all these different time frames. So that's why we want to have a look into high time frame and mid time frame and a little bit low time frame market structure today, so that we can define our ranges better, so that we can read the context better, so that we're able to know where we should long and how long we want to hold these positions. Because I know when I started trading, my main problem was to define the market structure, and I usually either cut positions too early because I didn't realize it was an uptrend already, or I took way too less profits because I thought, oh, it's going way higher, but in the end it was a range and we just rejected from the range. So yeah, I ended up round tripping. So reading the market structure is really, really important, and that's why I wanted to cover it today. Okay, let's say we dive right into it. So I get a lot of questions of which wick should I use, and is this the low, and is this the low, and is this the low? To be honest, especially higher time frame wise, you don't need to define the perfect low and like on the cent, or sorry, on the dollar exact. You don't need the perfect low. You just need to define areas. And I like to think in ranges, because ranges give me the opportunity to say, okay, good, it's range high, range low. This is an area. I want to take profit at the range high, and then I want to take profits at the range low. Basically, price is ranging more than it's trending. I mean, most of the people come to, sorry, Mr. Sadcat, could you please mute your mic? That would be great. Thank you. Prices ranging for more time than it's trending. So we really want to be able to define and trade ranges. Even though most of us came for these crazy explosive moves in crypto, but as we all experience this cycle, if you're not able to trade the ranges, if you're not able to define ranges, yeah, we will probably round trip everything. So it's wise to really be able to define ranges. Okay, for example, I don't want to cover all the PA back to 2022, so I start in 2023. And as we all know, most of the year was basically one big range. And for everyone that always wanted to long the bottom and targeted 100K, it was quite painful because we tended to just grind lower and lower and lower. And I remember that most people in this area got really skeptical and they said, oh no, it's 42K is next, which never happened. And then the explosive move came. But in the end, for making money, we don't need these explosive moves. This is why we trade leverage, because with leverage, we can enhance our position size. That means we can trade smaller moves a lot more efficient. We can make more profits in these ranges. So we don't need these crazy moonshots. I mean, they are great. And for the trading spot, they're great. And also to trade range longs out of the range and trade them higher, higher, higher. This is really great. But in the end, we want to make money and we don't want to hope for moonshots. So we defined ranges. And in this case, the range is pretty obvious. And as I said, I don't like to have this one high or one low exactly marked out. I just go for an area. So if I mark this, I don't draw these ranges because they always give the impression, oh, we need to reject from this line. That's really not the case. In the end, if you reject somewhere in this area, we are still in the range. You can also make this area wider. And what the range does, and what we always do with Fibs, is we define ranges. Because if I draw my Fib here from this swing to that swing, in the end, I do nothing more than define a range like this swing, and if we go way up to the 786, for example, we reach the premium zone of this range, and we are also in the premium zone of the bigger range. So this is somewhere where I want to take my profits off in this range, or at least a partial profit, so I'm able to buy back lower if it should happen, and I have the opportunity to make more money if we break out. So this is always what we do. We define ranges. This is how we should draw Fibs, and why we draw Fibs in the end. We want to define discount and we want to define premium zones. So in the end, now it looks obvious. This was the range. Of course, if price hasn't developed yet, it's a lot more difficult to define a range, because if price looks like this, you say, damn, so where does it end? Where does it start? And we always go for what we know. We cannot predict the future with 100% certainty. So we define a range with what we have. So if we were to take a long here, because we took out those lows, for example, you take a long here, you want to take profits in the premium of the range. And this is what we always do. Doesn't matter how long, how big, how wide the range is, which time frame. And I don't want to cover this too much because it's already a long time ago, and probably most of you can really remember the PA in this area, and we're probably a little bit confused about which low to take. So I want to go in depth into this one. So as I said, now it looks pretty obvious, and afterwards we can always say, oh yeah, it's pretty obvious, I should have taken profit here and short there. But as we all know, it's not that easy if price looks like this. But as you can see, we approached 100K, and we had the confluence from Money Tower, because he said this is his best case range. We have the negative Fibs, and we have the fact that retail was waiting for 100K, and they were finally gifted with 100K. And so whales played games around this level. As you can see, we have these crazy wicks above, we have these crazy wicks below. So 100K was a pretty reactive level due to that. So, and if we are here in this area, and we say, because we can read the context a little bit already, we say, okay, good, we expect price to reverse somewhere from here. I mean, we are grinding higher, of course, but we had already pretty heavy move to the upside from especially from the lows, of course. So we could expect price to reject from somewhere. And what we can do is we can draw a channel, of course, but to be honest, I don't like them as much because I can always force them like I want. So I look at swing highs and swing lows. So if we look at price here, we have very obvious key lows, for example. To me, that's here. And if I want to play it like for a bigger range, I say, good, it's also here. And we have the most obvious high, of course. Here, it's the newest, but also this one. And this one was broken here. And now this is where it gets complicated, because first we only had this PA, and we said, okay, good, a close above, we wicked above, swing failure pattern, doesn't look good. But now we get these closes above. So we took out this high, so we define a new one. We define the highest high, and we say, okay, let's go. If we don't break this high, there's no reason to expect the trend to go higher, but we did that. So this looks kind of bullish, and this is what people get really confused about sometimes, because this is why context always matters. I mean, okay, good, this is a close above, even a second one, and then we get the big nuke. You always have to consider people are looking at closes nowadays. It's no secret anymore that only the closes count. I mean, of course, the usual 90% retail doesn't look at the closes, but it's not just about them. I mean, there are big traders which have a lot of money and they look at closes, and these closes can be confusing. If you look at the 2021 high. We have one close above the high. We have here several daily closes above the high. But in the end, we form a three drives pattern. The market was already in big heat territory, so the context matters here. So you cannot always look just at the closes and say, oh, we're going higher because of the closes. See here, close above the high. And then the big bear market started up after this close. And this is why we also look at different time frames, because on higher time frame, the weekly, for example, matters. And you see nothing here. So that's why I say you need to go to the lower time frames, but you always need to be able to read the context as well, because we have many closes here above, but it's still not your sign to go max long here. It's always about context. So, but we took out this high, we get our pullback. As always, we don't enter at the highs anyway. We wait for a pullback. And with this close above, you could argue to take a long here, somewhere in this neighborhood. I don't look for levels now. It's just it for visualizing. So you say you take a long here, or you trade this block, whatever. And your target is not 200K. Your target is within the local range. And the local range is always defined by the highest high and by the lowest low. So inside of the swing, this is below the 0.5, for example. Yes. So if this is my swing now, I can trade here, I can trade long, but I have a realistic target. I don't target like 200K. I always target the next logical high. This is why these highs matter. We have the close above. Okay, that's fine. So we can look for a close, but I always want to make sure to take profits until here, and then I have some kind of runner. Sometimes it's bigger, sometimes it's smaller, but context-wise, if you zoom way out, this is not discount anymore. So I don't expect a moonshot from here. I target the most logical, closest prominent high as my max greed target, and I take profits on the way up, and I try to trail. And this is how I make sure to be always profitable. But if we get a moonshot from here, or let's say another move higher, it doesn't need to be a moonshot, but let's say we go for 125, it's nice to have a runner. And if you get a close above, you can always try to long the pullback again. So you don't need to buy once and try to hold to 200K. You can always try to find new exposure. And if you look at PA here, price moved pretty ugly around the 100K level. As said, 100K, pretty important level for retail. And here it gets even more complicated, because you can always look at different lows to define your market structure. I mean, if you wait for this close, that's fine, because as said, if we close below this low, we break the uptrend. So if we close here, we break the uptrend. If we close above, we confirm that the uptrend is still intact. Everything in between is just a range. And until then, I just trade the range. And you can, of course, you can get your early signs if you mark this swing low here, for example. You can say, okay, good, this is my, let's say, mid time frame swing low. But then it gets really complicated. So this is something you should only do if you know how to read the structure properly, because we get a close below, but it's not a full body yet, and it can get quite confusing. So for now, let's stay at the daily. And we define this low, and until we break it, it's a range or an uptrend. So price moves on. You see, within our range, I can also draw a range to make it more visible. So this is our range, and within our range, we made a higher high. XRP did that, for example, recently. It's a similar structure. We have this major high here, we have a smaller high, and we took out the higher high. I mean, it wasn't the nicest close. I like to see full bodies above, but a big part of the candle is above. And here's probably something too long, lower time frame or mid time frame, whatever. And you should target, in this case, you should define a new range. For example, if you long according to this range, you can target these highs up here. But if you long somewhere here, you should target maximum these highs. Do not expect a move higher. And also look for distributive patterns like the 3 drives, like here, and plus the context. We see the 3 drives, context, and then we say, okay, maybe this is pretty distributive already. Plus the giga bullish news around this range. So yeah, you see, we took out this low, but no close below. It looked pretty ugly when we did that, but we had no close below. In this case, you could mark out this as your most prominent low. But as said, what I like to do is to just define a range. Oh, what's that? Okay, I never did that before. Give me my box. No. So it's about the area. It's never about just this one swing low. For me, it's always about the area. And this is how I make sure to not get too many signs at once. You see, we get a close above. So internally, we are forming higher highs. We did not form lower lows, but externally or in the bigger range, we did not take out this high. We have no close above. We did only a swing failure pattern with a big wick. And these big wicks on the upside or on the downside are always a sign for a big, what's the name? Sorry, what's the word? Resistance or support, because yeah, price pushed only above this highs to take out the liquidity and nuked all the way back to close here. And I mean, it's a 6% wick, so the pressure from above is quite heavy in this area, I would say. And you say we only trade inside of this range. Of course, we make higher highs inside of the range, but in the higher range we didn't. But we also did not make lower lows, no real lower lows. And that means we are in this range until we are not. Big wick on the downside. So, and this is something where it gets kind of boring. This was quite fast, but we all know what happened. So this is the point where the range gets broken. And we can get early signs from lower time frames, but you need to be careful to not get confused, because you see it was kind of just going sideways here, and then with this 8-hour candle we took out this local low here, which is an early sign of our sideways consolidation, or yeah, of the downtrend to continue here at this point with this close. So this is not looking very bullish here. The next logical point to look at is this wick. You can, like I said, to me it's not mechanical and not like fixed and written in a book. For me, it's always a little more fluid. And I get my next sign here. We close the next candle below this swing, 12-hour as well, daily as well. Also with the next daily candle, we also close below this low, and we close below my area, and that means we invalidated this range. So what I would do here, if I had any Bitcoin left, I sold my all the way up here, so I have sold all my Bitcoin in this area somewhere. But if I had some left, this is the point where you should cut your bags, and this is valid for all coins. This is not just about Bitcoin or not just about any major altcoin. I mean, it's a lot harder to do that on highly volatile, low liquidity coins. That's why they are so hard to trade and most people can't handle them. But if you get the invalidation of your range, and on CAS, for example, we had some similar pattern, but in a 30 or 50% range. And this is why people forget it's still a range, and you still need to invalidate your idea. If you need to trade your stop loss, basically. That's all I want to say. So if you get the upgrind and I took not enough profits here, this is the point, or I have some left. This is the point where I cut my bags, because this is where structure turns to the downside. This is the first candle that really told me, okay, this is not an uptrend anymore. We are forming lower lows on higher time frame. And you can cut your bags here. You should cut your bags here on every coin. If something like this occurs, you had a lot of time to sell, and here is the latest point. What price usually does is that we get this bounce, and usually that's what we're always looking for. According to the money tower edge, we wait for the close above or below, we wait for the pullback, and then we short or long into the continuation. Oops. And when price is here, we invalidated this range, we broke this low, means we are in a downtrend. So our last recent high is now this one. It was already here, of course, but yeah, you know what I mean. And to say we are going to form higher highs, again, we need to break at least this high. And so until we did not break this high, we expect some kind of reaction somewhere in the premium of this new range. And we can expect a new range to form here. It doesn't need to look like this. It could also look like this or whatever. But in this situation, you want to get your early signs. You don't want to just react. You want to make plans of what is going to happen next. And that's why you should define a new range. And this is what you do. You have a swing high, you have a swing low. Let's see if this is the real low. No, it wasn't. And we are going up again. So at this point, I have my swing, which means I have my range again. Why? Because it's a range until it's not, and our Fibs are nothing else than a range basically. And we want to break the range to the upside or to the downside. And until we did that, we just trade the range. And we are here in deep premium of the range of the swing. And that's why we are looking for shorts here. And in this area, if I remember correctly, there was some kind of 10 hour something. Yeah, so partial stuff. In the end, until this breaks, downtrend. Until this breaks, range. If it breaks, downtrend confirmed. But if I take a short here, I want to make sure that I have a realistic target. Maybe you could play it wide, whatever, or you play it tight. But you want to make sure to take profits inside of this range, because probabilities are high that we reject here. Probabilities are high that we chop around here until we break this low. And that's why we usually take profits on big FEG fills, on the 0.5 and at the range lows. And you don't need to take profits like perfectly here. If you take profits here or here or here, in the end it doesn't really matter. You wanna make sure to be profitable in this area. You wanna take profits here, and you wanna probably take profits here, depending on what levels are formed in this area. But it's not about the levels today. It's just about market structure. So we sweep these lows, this low, but we never close below. And that's what I mean. We are inside of the range. Now I can hear myself. I think it's Solaris. Yeah, could you please mute? Thank you. Yeah, and we are inside of this range still. And you can define the next swing low, of course, which is this. But we never took out this one. So why would I not consider this anymore? And you have your range low defined. Come on. In this area. So of course this is the most prominent low. But if we bounce from this area, if we bounce here, or if we bounce here and close inside of this and above this swing low, we are still inside of the same range. So, and now we are here in the present moment. And as you can see, we have two key swing highs and swing lows. We have the low, we have the key high, what's going on with this key? Okay, doesn't matter. Yeah, so, and internally, and this is where I dive a little deeper into the market structure, because we want to get early signs and we want to see what's going on. This looks kind of like a low, which it was, but it never closed below this low, so I wouldn't count it as low. We are still inside of this range. And we are inside of the smaller range here. So if I would take a long here, where's my tool? If I would take a long here, I would probably take profits around these highs, because according to this swing, this is premium, and according to this bigger swing from here, it's also premium. So as always, it's not about the perfect high, it's more about this area here, which is also in the premium of this range. And so if we long something here, I would target first this high. This would be my first take profit, or somewhere in this area. This is also about context. So this is just about market structure, but context wise, it's probably a little more wise to take profits once this FVG is filled here, because it's probably around the 0.5 of this swing. So we probably want to take profits here. So if let's say we took this long here, for example, it's just an example. It's not about this level. So I want to take profits here, my first TP. I want to take profits here, my second, maybe here. This is also something you can look for rejections of these highs. So if we just blast through, why would I take profit? So I'm always flexible with my approach. Of course, if we reject here and I didn't get it, and I said, oh no, we are blasting through, but we didn't, I maybe end up taking profits here because I saw it too late that price is rejecting. But in the end, first take profit in this swing, in this range. This is why the 0.5 is also here. Our swing is nothing else than a range. Second TP, probably somewhere here. Also, if I look for levels and I find something here, of course, if there is nothing, I might as well try to trail it higher until the next key swing high. And then this is the most important level, because as long as we don't break this one, this is definitely a downtrend. Definitely a downtrend. Until we break this high, why would we consider something higher than 110K? So even if we long, we all know the 72K level here. We all wait for it. And this is another good factor why to expect the downtrend to continue, because we are in a downtrend. So why would I expect something that is not on the charts yet? So we are in a downtrend and we have this key level below, which acts like a magnet. So it's pretty likely that we go there, but it's not necessary, of course. But let's say we go there and we took out this low. This all doesn't matter anymore. The only thing that matters is this. Let's say we do something like this. We nuke into the level, and then we get our bounce, and let's say we play it a little wider because it's in high time frame level. So this is, for now, this is the maximum greed target. Why? Because this would be our new range. This is our key high, And if we make our low, let's say here, then this is our key low, which makes this the new bigger range, and we trade the range. So this is not so important anymore. If we form lower lows, in my opinion, then this is the most important one, of course, on these time frames. And let's say this is the last high here before we nuke, then this becomes another big key swing high, because if we take it out here, we can expect a pullback into a key level and can expect a bigger range to get to the highs of the bigger range. But until we did that, we should rather expect something like this. So it's wise to take profits in this area on our long. First TP here. Stop loss should always be at break even if we reach the first supply level or the first level of resistance. And then if we get a pullback or something like this, we can expect, after we closed above this high, we can expect that these high get reached. Of course, there's some smaller highs here as well. This one is still valid, so we would probably take another profit here. And this is where you really should make plans, not just react. You should make plans for the future. You should have different possibilities mapped out in your mind or on your chart, it doesn't matter. And you think in probabilities. And as long as these highs or lows don't get taken, it's more likely that we stay in the range. You need to define the range of right, of course. So this is our swing low. Of course, this is in higher time frame level, so this is very likely to get hit. But if I had a short here, I would probably take profits here, because this would be my range for now. If we break it, this could be my range. So you see, we break it, we retest it, and we go into the key level. You need to map out different probabilities, and in the end, it's nothing else than probabilities. I mean, people like Money Tower, they can really like almost predict the future, but for us, which most of us probably can't, we should think in probabilities. We should map out different scenarios, and we should look at these highs and lows and always expect to be rejected from there until proven otherwise. So you make different plans, like I said, 2, 3, 5 different scenarios. Doesn't matter how much you can comprehend with your mind, I would say, and then you invalidate or validate the ones that gets more likely. So in this case, if we close above internally, if we close above these highs here, if we had a close here somewhere, maybe even let's say we close above this high, it gets a little more likely that we don't see the deep pullback, but we didn't. So we haven't even taken out this high here, and we're about to take out this minor low here. Because if I go to the lower time frames, we are still inside of this little range. For now. So of course on these time frames we took the high, but it's not as relevant as on the higher time frames, of course. So, and if we internally, we made higher highs here, but if we start breaking down here, it's a lot more, it looks a lot more like lower lows. So we go down here, we form a lower high, and if we break this one, this would be the next key swing high on this time frame, on these time frames. And then we can internally get early signs of continuation or rejection. And this is how we can define if we want to take more profits, less profits. For example, I was sitting in a long from here, if I remember correctly, or somewhere in this area, doesn't matter. And if this closes above, it was a scalp, I was pretty confident. I took a little less profits, but once we started breaking down this structure here and we broke this, I decided to take another big profit here. And in the end, to me, it doesn't matter if I take it here, 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 here. I just want to be profitable, and I want to act what the chart is telling me. If the chart would form higher highs here, why would I take early profits? If the chart is forming lower lows, I would consider taking more profits because I don't want to round trip most of my gains. And this is where it gets complicated, but this is also where it gets really powerful if you can understand market structure on many different time frames, because yeah, this will help you to get early signs. Because if I always wait for the daily close, I mean, I would wait for a close below this area, but this would somewhere here, and from my long example, I would have already paid back like almost 4%, and from this high almost 6%, and I cut the rest of my long here, which is only half of what I would have paid back with waiting for this close. So yeah, this is where it gets complicated, where it gets confusing, but this is also where it gets really powerful. But for now, for everyone that is not familiar with lower time frame stuff, just map out higher time frame plans, look for these highs on these lows, try to predict the future to some degree, but not like, oh, I'm sure Bitcoin does this or that, but rather if we close here, it's likely that we retrace in a key level because we almost always do this. There I can take a long because it looks like it's trending up. I want to take this long. Okay, we get rejected here. I have taken one profit, get stopped out, break even. Just make plans and think like an algorithm. If then, so if we close above this high, then I do this. If we reject from this high, then I do this. And you can do that on every time frame, but I recommend to focus on higher time frame and learn to read the structure there. Okay, I think that's it from my side. And now you can ask your questions if you like. And you can also talk. And there are already some questions. So if you like, you can already also talk to me. If not, you can write down your questions. Yeah, glad when it helps. And we can talk about this a lot of times, and maybe I talked a little bit too fast. But yeah, we can repeat this over and over on different charts. Next time we can do that on Ethereum, which is one big range since over a year now, basically. So yeah, this is something you should really get into your head, because with this knowledge you can start to predict the future and not just react. Mhm. They really like that, yeah. Mhm. Yeah, as Monitor also says, price really likes the zero point 0.5 as algorithms push price always to the 0.5. Okay, do you use Fib extensions and negative Fibs to help predict where the next range may be? Yes, I do that, especially on higher time frame. I don't like doing that on lower time frames, but it could work, but I haven't back tested it yet. So sometimes I force myself a negative Fib to get more confidence for a level, but usually where I really like doing that is on higher time frame. And I also thought that it on some charts it works better than on others. And this is here my negative Fib example on Pepe. We can repeat that shortly. So on Pepe it was like magic. It really was like magic. Once I found out about the 0.5, minus 0.5, I charted Pepe with it, and the reactions from it were kinda insane. Like almost always perfect. And there is one rule I use when using these Fibs, and this is sorry, this is, let's go to logarithmic, and this is that we need really retrace to the 0.5. So if I have a swing here, let's say, no, it looks crappy on the logarithmic. So if I have a swing here, let's say this is my first bullish swing, I want to see at least a retracement to the 0.5 so that the minus 0.5 is valid. And you see it's also about the area here. I don't consider the minus 0.5 as perfect target. And also it was a spot bag of mine. And for spot bags, to be honest, I don't care selling in this area if it's 10, 20% plus minus. I want to sell around the top. And I saw that it worked pretty awesome here. So I decided, okay, why not define the next swing, which is this bullish swing here. So put this on that side. So we have the next bullish swing. We retrace to the 0.5, which is my rule, or which is our rule, I think, that the minus 0.5 is valid. And when price was here in this area, let's say here, we defined the swing. We retraced it until the 0.5 and even lower. And at this point, this was my main target for Pepe. Also the 1618, of course, which is always somewhere in this neighborhood as well. But I find that the 1618 doesn't work as well as the minus Fibs, but it's usually somewhere in the same area. So yeah, you can also use that one. And then, as we all know, Pepe did another big crazy run. And here also just a small market structure example. We closed the weekly above this high. So of course, price really turns bullish once we break above this high. But as we all know, crypto tends to have these crazy lockout moves. And if you're flipping bullish here, I mean like 100% or 90% from the lows, it's probably a little bit late. And I mean, internally, we get these higher highs here. We have this high, we have a whole block, so we have 2 weeks above this high. We took it out. So this was my first early sign of Pepe probably going higher here. Also, we have this kind of rounding structure a little bit. And as said, of course, looking at the whole swing and the bigger structure, this is where it really turns bullish. But this was already an early sign. And this is where I want to long on pullbacks, to be honest. Sorry. It's still tricky, of course, longing these pullbacks, because here structure turns to the downside, but this is our key swing low, which we haven't taken out. That's why altcoin trading is so tricky, because they tend to move like really aggressive and erratic sometimes. So, and you can, most of the time, you can't trade them with the same size as major high volume coins. So in the end, for most, it's probably better to go with more position size for higher volume ones instead of chasing these crazy moves. Because to be honest, I made more money this cycle with Bitcoin, even though I hit a 20x on Pepe. But you cannot play Pepe with the same size like you can play Bitcoin. And you see, we get the close above this, above the real higher time frame high. And yeah, on this close, it's probably a little bit late, as said. So I really want to make sure to read the structure and the context, of course, a little more early than most people. So I'm able to catch the meat of the move. And you see the perfect reaction of the minus 618. And this is where I took my profits. I started taking profits here because, yeah, I'm always afraid of crazy nukes right after we reach this supply level. So I rather take my profits a little bit early than too late. And yeah, we did some things here. We even closed above, but this is something you shouldn't care, to be honest. It's also if you look at the whole swing, wrong Fib. So if you consider the whole swing from all the way down here to here, and as said, I want to see the retracement to the 0.5, which you also had, like this swing, retracement to 0.5. Next target, highest target was this one. And yeah, and as said, I took most of my profit somewhere here. I missed out 22%, whatever. What do I care if I buy Pepe here? What is 20% plus minus? I want to sell around the top, not selling the Pico top. And you see here's also on looking at the weekly, it's kind of if you were blind. So this is where you really should be able to read structure internally earlier. We have the break of this low, which was a range until it was not. Because if I consider this one, it's probably also a little bit late. I mean, it's from the highs, it's already 40%. So I want to have my early sign, which was here. We have the context, the confluences from the macro situation, bullish news, Elon posting about Pepe, all this kind of stuff, a little bit rounding structure here, and then we get the nuke. And until we take out these highs now internally, but of course, this is our first level of interest, and to consider even higher highs or all-time highs, I mean, we need to take out this, and internally we make higher highs, which is kind of nice. But as we all know, Pepe nukes pretty ugly afterwards, and in the end, we have not really made higher highs. Even if we consider this as a higher high and we nuke back down, and the first thing we do after such a minor close here above a minor high, and then the first thing we do is making lower lows afterwards, it's yeah, usually not the best sign. And then Pepe slowly died. Slowly, yeah, rather fast. But yeah, this is for the negative fibs. But as said, on some assets they work incredibly well. On some I find them not so useful. But if I find a ticker where it works like perfectly, I always draw them, no matter what. But I don't use them as often on lower time frames. I rather define the ranges, like I said, swing high, swing low, until we break to the upside or downside. I consider this as a range, and this could go on for years here. So, and we could still make money. Usually it's a range until the range is completely drained, until all imbalances are closed, until no traders are interested in taking new positions anymore. Then they open a new range, which would be here, and then at some point they ignite a bigger move to get all the spot buyers again into the game again, which usually opens a bigger range. But as said, if we go down here and if we don't close below the 66k and below this level, below this area here, in the end it's, as said, always about the area. If you don't close below this area, I consider this as new range, which is a 52% range, which is an awesome trade here. And I have a realistic target, and if we go higher, I trail my position. Considering the 23 hidden OB, yes, I usually I didn't trade the odd time frames very often, to be honest, but with the latest Money Tower post, I consider them a lot more, and they seem to work lately. They seem to work incredibly well. So yes, I consider them. Do you use ranges frequently? I mean, if we have the majors plus the market structure is a bit superfluous, right? NX Fast, I don't get the question, to be honest. Maybe you can ask it in a different way, or you, yeah, please. Long it got stopped. Yeah, we all get stopped cheering. It's not uncommon. I'm not inside of your head. I don't know your setup, so I can tell you more than we all get stopped. Usually, if you're wearing good profits and you get stopped, it's your fault. If the level just didn't work, maybe it's a bad level. Maybe you didn't play the edge right, but sometimes we just get stopped and you cannot do nothing about it. If you get stopped on too big size, it's your fault and it's a bad mistake. But if it's inside of your risk management, um, happens to all of us. Is there a correlation between the length of the range and the amount of time you would allow a candle to close outside to invalidate it? Um, Usually, if a range is very long, it dries out very, very fast or very aggressive. So at some point, for example, in this range last year, you saw that people had no motivation to long or to short anymore. There were no new positions. There were no new open interest, and it really dried out. And at some point, they need to ignite a new move. So usually, if the range is very long, I mean, it depends on the time frame. If you go to the 2 minute chart, a range can look very long on in 2 days, of course. But let's say if it's a long, higher time frame range, usually people get bored or have no money anymore, and they need to open up a new range, which they did end of last year. We have this kind of rounding move out of here, big parabola into a new range, and we had this range, as said. We were trading inside of this smaller range here. Now we open up a new one, and as we have this key level here, it's very wise to expect a move into this area, which would be our new range. And this range could, of course, last a whole year. Maybe let's say the April gifts us with another bullish swing here, and we do something like this. Maybe just a swing failure pattern, maybe even a close above, because people, as I said, and back in 21, they also got tricked with closes. And then we do something like this. I mean, this could take forever here if you're on the wrong time frame. So yeah, at some point the range is dry. Whales on or offloaded all of their bags, and they want to open up a new range, like I said, which they did here. And if you look at this cycle, it's always just range, move up, range, move up, range, move up, and at some point we probably range here for a little longer. And yes, as I can imagine, if we pump 60% and stuff, people get really, really bullish again. We break 100K, and you see it all over the news and stuff. So they don't need to invest in such a move. Why would they? That's just expensive for them. The retail doesn't move the price like this. This is just whales moving price. If you have these crazy higher time frame moves, and they invest just as much as they need to drain retail a little more. So in the end, they need to open a new range. They need to ignite these big moves, because this is why most people are here. So they get what they want, even if they don't take profits most of the time, but they get what they want. They deploy more money, which can be drained inside of the next range for whales. And they on and offload their bags in these ranges. And if they offloaded enough, they probably open ranges to the downside. Maybe structural, we see structural changes here, and price moves more aggressive in the bear market, just because most people couldn't handle this as well. We will see, but inside of these moves, if you zoom in, we will spend 1, 2, 3 weeks here, and it will be a range in the end. Like it's 73K. You're welcome. So if I get it right, NX fast, because with market structure, even majors ranges can be misleading, especially in the way we draw them, like at 73K. What do you mean with we draw them at 73K? Like I drew it here, right? So like I said, I don't trade the ranges. I don't care about swing failure patterns above the range or whatever, even though it's very, very powerful to just long or short these major highs, what I've seen. So if there is a major high and you say you don't need to define the range. I said I never draw ranges, but I always spot them. So I would definitely look for a short here. If there is a level or not, I don't care. And I would play it probably would play it a little wider. But if we go for this, I would probably short it here and try to swing short the all-time high. Because price just usually just reacts at these major highs. I mean, of course it overshoot it here a little bit. And as I said, I don't draw ranges, I don't trade them necessarily, but if you draw a fib, if I draw a fib like it's usually drawn, you see it's nothing else but a range with all the little steps in between. Like if I draw it just with the 0.5, it is a range. You know what I mean? So if we go from all the way here, we go down there, we would probably draw a fib here and say, good, or this is our major higher time frame swing. We reject here, so we target the 0.5. So we in the end we draw a range. So it is a range. But because I want to keep my chart clean and I don't want to get distracted by these lines everywhere, I just draw the 0.5. I know my swings. I just make small lines here, and I wanna short somewhere in this area. If I find a level, great. If I just short the all-time high like this, it's also okay. It's probably we don't take out this range, and if we do, let's say we do take out the range high, we close above, my short gets stopped. We formed some kind of level here. I long the pullback, and we can expect higher. I mean, if we get a real convincing close, like weekly or higher above this high, with majors and with all the sentiment, with the news, everything aligning, we probably could consider this. This is why context matters so much. As said, we got these closes here, but context was okay, good. Bitcoin rallied like, yeah, a lot. So this close is context wise pretty weak. This close would be as well, only if the context is in favor of higher. I would consider longing here, and even then I would not go full size or just my usual trading size. When we're here, we could know that this range was correct. What do you mean by that? I mean, yeah. So basically, if I understand you right, this is the range for now. So if I had a short from the top, I would take profits at the lows of the range. If I had a long from the lows of the range, I would take profits at the top of the range. It's not about the range itself, and it probably gets broken. So yeah, I don't care about the range itself, but this is my swing high and my swing low, and this is my area for looking for shorts and for longs. And until we break these highs or lows, I just take my profits inside of this range. But of course, for me, it's not like, oh, we are going to range. I take my biggest long here, full size. No, this is just for taking profits and no, understanding the context. Yes, exactly. And it gets validated or invalidated if we close below or above. Yes, and but if we don't, we expect a rejection because usually price ranges more than it trends. When taking a trade, a part of the scoring system is higher time frame trend. Let's take Pepper Dodge, for example, currently in the range along would be in the higher time frame trend, but in weekly against it. If the current Pepper trade, would you call this with current trade or against? Yes, this is a good question, and this is why I addressed this today, because it's really confusing right now. It's really confusing, and that's why market structure is so important. So, for example, I drew this trade like this, but my real target is probably somewhere here. Why? Because we are in a downtrend. We are even in the daily on a downtrend. We didn't even close above this high. We didn't even close above this high. So it is a downtrend. So don't get me wrong. But as you saw on the paper example from here, at some point you want to make sure to get some long exposure. And as said, altcoins and especially the meme coins are pretty ugly to trade. You see, this is something reminds me a little bit of this situation. So we get these pumps above the local high, and then we retrace even below this low. And this could easily happen. We could easily retrace below this low. We get this pump above the recent high, which shows me again here locally, nice. This is a higher high and no lower lows. And then we grind back down, we make a lower high, and we take all these lows, which probably takes your long if you had one from here, takes the stop loss. So what can we do here? In this example, what can we do? We can try to catch a long here because we get the higher high, we get the retracement. Let's say here's a nice level we want a long, but we don't target with this long, we don't target the moon. We target this swing high. We have a realistic target, and this means we probably took a profit here, we took a profit here. If we reject here, we can also take a profit here. If we break down, we have the stop loss at break even. We get stopped here, break even, which is too bad because right after price mooned like crazy. From here it was like, I don't know, 200-300%. So we are not in the long, but this long was profitable. We were stop break even. We had the possibility, the opportunity to make more money because if we just moon from here, we are in a nice position. But like this, we make sure to be profitable, to be safe. And this is why I like to trade spot, because I bought spot here in this area and I don't care about the local structure here. I mean, I said, okay, good, we make higher highs. That's nice. That's fine. I don't add on spot here because I did already. I had already a nice bag, and I don't care about this lower low here. And I don't get stopped on my spot bag. Why? Because I wait for a close below this low. If we close below this low, then my spot thesis is invalidated, but I don't touch it. I don't take profits here, and I don't take a stop loss at break even here or whatever. My spot position looks something like this. I accumulated all over this range, and I target my higher time frame target. I don't care about this, to be honest. You could think about taking profits here, but that's why I took a long here, for example, and took early profits here. I make sure I'm profitable, and my spot thesis wasn't invalidated. And that's why I have two different portfolios in the end. I have a trading portfolio and I have a spot portfolio. And my trading portfolio is always about, aha, close here, there, cut early, take profit early, whatever. And spot is, I have a higher time frame thesis, price will, let's say the markets will have another bullish swing. That's why I want to make sure to be exposed. And this is just maximizing profits and making sure I'm profitable every week or every month, while the spot bags are only printing like every few months or 3 times a year or whatever. And as said, if we had waited for this close here, if we look at the weekly, it's up here. We get the close below, and the next week we get a giga moonshot candle, and it's probably too late. So this is why in some cases you want to make sure to gain some long exposure, which we make higher highs here. I mean, we didn't take out this one. I only took 0.5% risk for this reason. Also, I took the Doge short long, which adds up. So I have two longs from the same area in the same market, which is 100% correlated. So I don't take 2% on both. I take a small risk on both for these reasons. But if I wait for this close above here or here, as I know crypto now, we would probably just blast through and go up here, and then it's too late. People start longing here because they, oh no, it's an uptrend, I forgot to buy the bottom. This could always happen. I'm not saying this will happen, but this could always happen. And that means I tried to catch some longs here. I tried to catch the uptrend, which isn't the uptrend yet, but I tried to get my early signs with these closes above and try to gain more long exposure here, because right now I have zero Pepe and I'm not interested in buying spot Pepe besides on this level, which is pretty far away for now, but who knows. So I try to catch some longs here and I target a realistic target. I will probably take profits here with close of the FVG, maybe even a small profit here and move my stop loss to break even because there are some odd time frames. Next TP here, max greed TP here because there is a big level, and I mean the chart looks really cooked anyway. So this is really a short-term, mid-term play somewhere in this area. I probably will have taken 50 to 60%. If we reach this level, 50, 60, 70% are already gone, and then I try to trail the rest as far as I can. And the same on Doge. We have to close above this high. It's a 2-day level. We have a 2-day close above. We didn't take these highs here, but as said, I want to get an early sign, so I try to catch along here. But I'm always aware that price could just do this. Zoop, take me out, make an higher high, make something ugly, and then go up. So this is always a possibility, but that's why I just accumulate spot here and I don't touch my spot back until we reach the 0.5 here. So this is my first target for spot. This is my second target for spot. Here I will take probably until at least 40 to 50% of all. And then my max greed target is here. So if we reach that, 50% of my spot back will find out. And on the way up, I try to catch longs and gain more long exposure as long as the trend continues. So if we get small pullbacks, higher highs, small pullbacks, higher highs, small pullback, I try to catch these longs, which I do right now. So yeah, that's why it only makes sense to me to long here, because we are in higher time frame discount. We are forming some levels, some higher highs and stuff. So it makes sense for me to try to catch some longs here. Okay, guys. Any further questions? Not all at once. Okay, seems like you guys are happy. I hope it was helpful. You're welcome. Yeah, you're all welcome. Yeah, we do that. I guess we do that more often. I kind of like it, and if it helps you, we can do that. Like every week, every second week, I guess something like this. Yeah, of course. But more live streams, more better, I guess. Yeah, and I recorded it and I will upload it as private video on YouTube and I will send the link into the group. So for all that missed the beginning or whatever, you can watch the live stream on YouTube. Okay, so thanks guys for tuning in. I wish you all a great weekend. And yeah, hear you next time. And happy trading. Bye bye, guys.